Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 11th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. As it's a Monday, of course, we'll look at things from a weekly perspective and obviously some quite key things to flag here. First of all, weakness in the euro against the US dollar following on from those admissions from the ECB earlier in the week that were cutting their growth forecasts and looking to refinance the banking sector. We also have seen a significant drift off in the value of the pound sterling against the US dollar. Cable trading at 129.8310 shortly before we recorded the video. Over the course of the last week, the British pound giving back 1.54% against the US currency. That's principally down to Brexit uncertainty, and there's probably going to be a good deal more of that and therefore more volatility in sterling exchange rates this week. The Australian dollar against the US dollar still on the back foot, down by around 0.74% against the US currency, the Aussie dollar, and of course this is in the face of a potential rate cut now from the Reserve Bank of Australia and a mixed bag of economic data coming out of the Aussie economy. In terms of gainers, the dollar was on the front foot against both the Canadian dollar and the Mexican peso, taking 0.92% off of the Canadian dollar and just over 1% off of the Mexican peso. Dollar index for its part making gains of around 0.72% over the course of the week, and so starting very much on the front foot as we enter this next phase of March. Of course, it doesn't seem to have been too badly affected by those weekend non-farm payroll numbers on Friday, and I'm sure we're not, or I'm thinking that perhaps we haven't seen the complete fallout from that data as of yet. Okay, what's on the calendar then? Events that may move the markets today. A pretty busy calendar today. We've got an ongoing meeting of the Eurogroup ministers today. We've had already machine tool orders out of Japan for the month of February. A somewhat disappointing number here, fell by 29.3% compared to a fall of just 18.8% in the prior read. We've got some more important industrial production data out of Germany at 7 o'clock this morning, and that'll also be accompanied by balance of trade data for January. So a real chance to see how the German economy has been performing, or was performing, at least in the month of January. At 8 a.m. GMT, we'll have retail sales year-over-year data this for the month of January out of Spain. And then a pause until 12:30 when we'll have similar data out of the USA, a raft of retail sales ex and inclusive autos, again the data for the month of January. 1300 sees the day's sole central banker speech, this one from the Bank of England's Haskell. At 1400 we'll have business inventories data from December for the US. There's also a series of 3 and 6 month bill auctions from the US at 15:30 GMT, and then a rather large pause until 23:50 when we'll get the last data of the day in the shape of large manufacturing data out of Japan for the first quarter of 2019. Okay then, breaking news and comments caught my eye overnight and over the weekend. And first of all, UK PM Theresa May starts a vital week in her career and Brexit negotiations with a key vote in the UK Parliament scheduled for tomorrow. And there'll be back and forth between the UK and Brussels, I imagine, over the coming week as well. China's consumer price inflation has slowed to just 1.5% in February thanks to falls in the price of food. The gauge has been falling since September 2018. It's also interesting to note that PPI, or factory gate inflation, for the same month also remained on the low side. Good for the Chinese consumer perhaps, but not so good for those that view inflation as a gauge of excess demand within the economy. And Donald Trump is to lobby Congress once more for his border wall funding. You remember that Congress rejected his previous application. Mr. Trump is to return and try and seek a way to appease Congress and get that money. Meanwhile, the IMF has called for an overhaul of the international tax system, which, according to it, has failed to keep up with the rise of technology and modern business practice, and that highlighted in an article in the FT. Okay, food for thought then, something to take away with you into the trading day and beyond, and why not think about this? After last week's cut in the ECB's growth forecast for 2019 and 2020 and weaker US non-farm payroll data on Friday, the future path of US GDP, or of the US GDP I should say, assumes an even greater importance to my mind. The question is, can the US economy continue to grow even as major rivals slow down? And the chart here on the right plots GDP growth in Europe, Japan, the UK and the US all the way back to 2001. What we can clearly see on the right hand side of the chart is the sharp decline in a number of the other GDP performances, but the US continues to head upward. Now, will that gap be maintained? Will the US itself start to slow? How much faster will some of these other economies slow down as well? Those are all important questions for the market. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representatives. And as I say, please do take the time to read this risk warning thoroughly. Thank you very much for your time today.